The U.S. 10-year yield topping 4.5%. In fact, last I checked, we went as high about 453, 454, which is, as Sherry suggested, prompting a lot of questions about what is behind the rise in yields and the consequent bond sell-off. Is it because of recession worries easing, or is it signaling inflation concerns? There's also the question whether U.S. stocks are bouncing back too far and too fast. And Sherry Kang, you've made this case and point repeatedly over the last couple of days. Is the yield rising also because folks are losing appetite for what used to be, the gold standard, risk-free in terms of assets, which are U.S. Treasuries?
Yeah, so we did see some recovery. Is that something that was short-lived? So that was really the question that I wanted to ask a lot of guests on our air as well. Is a Sell America not over in the market behavior? And it could also be something very short-term, that investors not liking the disagreements over the tax cuts and what's happening with the budget legislation and so on. But again, and you've been watching, Marty, markets longer than I have, and you tell me, and this is very confusing for a lot of people, I believe, including myself, that the dollar is somewhat stabilizing, but with the yields shooting higher, what does that really mean here? That the dollar is not really tracking the moves. So I don't think it's really about the growth related dynamics or inflation related dynamics, perhaps.
Yeah, I think what's unusual, Sherry, is, we've got the correlation between yields and the dollar back going in the right way, in the right direction, right? They're tracking each other. As dollar gets firmer and continues recovering, so do yields, which is usually what happens, right? But in the last several months, they've been pulling in opposite directions, right? Dollar just continues to sink. Yields kept going up. So the good news is 4.5 or 453, 454 is the high that I checked just a couple of minutes ago. It's not 480. It's not almost 5%, which was the peak we saw so far, not this year, but in the past 12 months or so. It's not yet there. But again, on these inflation worries, et cetera, I think it's going to be down to the PPI, factory gate prices. We should be watching those. Retail prices as well, what Jay Powell has to say. And I think one of the big tells is going to be Walmart. This stock has been on a tear when everything else has been selling off. They have not raised prices yet. What are they going to say in the guidance? Right? Are they going to lower it? Are they going to pull it completely? And what are they going to do with prices? Are they going to be forced to pass it on to consumers or what? I think, Walmart is just so big and so important. That's going to be a name well worth watching when they report.
And again, just like so many data points that we've been discussing in recent days, that maybe they just don't know. Maybe they don't have much to tell the markets because they just don't see the tariff impact just yet, don't see the damage in their numbers yet. And also, what else is really weird in terms of correlation breaking down here and there, the U.S. versus EMs. Sure, higher U.S. yields, that usually means weakening in the EM currencies. That hasn't been the case. Does that carry on? So I think those are just a lot of questions that we're throwing out there. And then, we've got an amazing lineup of guests who can actually answer some of that for us.